Happy Liberation Day, everyone. Today, Trump finally announced his worldwide tariff package. There are going to be a bunch of consequences falling out over it, so let's spend a little bit of time on them now. Specifically, I want to discuss 4 relevant points that are either glossed over or can be misleadingly reported on. What the tariffs appear to be based on, and it is not opposing tariffs, how to interpret the negative reaction on the stock market, what the economic burdens will be, and how this fits into the broader US domestic political picture. And apologies that this is a little slipshod. I am in the middle of animating a very long video about the rise and fall of the Western territorial peace, which coincidentally has a major basis in liberal trade policy. Watch for that on the main channel soon. And, in the meantime, get comfortable watching this video of the Rose Garden ceremony where Trump unveiled the tariffs. You will be seeing a lot of it. Okay, let's start with those specific tariffs, as Trump was kind enough to print an oversized poster board that displays all of the values. The left column is country name, the middle column is that country's tariffs charged to the USA, and the right column is the reciprocal rate that the United States is going to charge. Actually, let's zoom in real quick here. Country column, 4th down, Taiwan. That is going to go over really well in Beijing. Anyway, the first point is that the tariffs charged by other countries, the second column I mean, are not actually what is claimed. They appear to be some strange combination of what may be tariffs in some cases, but are also including the US trade deficit of goods, emphasis on goods. Hold that thought for a second. Meanwhile, the right column is a simple formula that you could program in Excel in about 5 seconds. Take the middle column and divide it by 2, because the United States is being nice in its tariff policy. Then put the maximum of that amount and 10% in the right column. Thus, everyone will be hit with at least a 10% tariff, even if they are currently charging the United States nothing, and there is no trade deficit. But it could be more. Now, the point about goods is important because the United States is a service economy. It therefore tends to export more things that are intangible, like entertainment, this video included, if you can call this entertainment. The United States does not export as much in the way of actual physical goods. Consequently, that second column is going to be inflated from what the actual trade deficit is. And I should further note that trade deficits are not actually the end of the world. If you are a rich country, you might want to spend money and enjoy that wealth, and that in itself can create a deficit. Regardless, on to point 2. How does this affect the stock market? And the answer appears to be bad. Trump announced the tariffs after the markets closed, so we have to look at the futures to see what is happening. As I type this, the S&P 500 futures are down 3.6%. Now, erasing 3.6% of your market instantly is bad, but this figure understates what investors think that the tariffs will do. That is because everyone knew that some type of tariff was going to be announced since November. So, to some degree, all of that had been priced into the market. If we restrict attention to just the last 3 months, which roughly coincides with Trump's entry into office, the S&P 500 was already down 4.6%. It is difficult to attribute what portion of that is due to investor expectations about tariffs, but some of it definitely is. Put differently, these tariffs are substantially worse than what investors were betting on earlier today. Why are those investors so concerned? Well, that takes us to the third part. What the economic burdens are here. Tariffs are nothing more than a tax on imported goods. Like any other tax, the government will collect some revenue, and there will be a suppression of business on the associated goods. Now, you will often hear that the tariff will be passed along to consumers. And that is true to some degree, but it is also misleading. Rather, it will be split between the end consumer paying higher prices, but also the seller having a lower profit margin. How that gets distributed between the two depends on the elasticity of the supply and demand. to avoid getting lost in the weeds of second derivatives, suffice it to say that is basically a question of how sensitive the seller is to lower profit margins, and how quickly demand drops off as price goes up. That will differ from product to product, so it is not worth going into further depth. For now, suffice it to say once again that the tariffs will hurt both foreign producers and US consumers. Who wins, kind of, are US domestic manufacturers. They are protected from foreign competition now. The higher competing prices make their products look relatively more attractive to consumers, so they can sell more goods. They might also charge higher prices to take advantage of the situation. Nevertheless, even then, there is no guarantee that a given US producer will benefit. Supply chains are incredibly globalized now, meaning that a US producer may very well be an importer of some of the input goods that are necessary to complete the end product. Thus, they may be able to sell more of the end product at a higher price, but they will also be paying more to produce the thing. The net effect is nebulous. You most often hear about this in the context of car manufacturers. Vehicles have tens of thousands of component parts, and many of them go back and forth between the United States and Canada, or the United States and Mexico, before finally arriving back in the United States for final assembly. All of that will be a mess. And that is before we begin thinking about how retaliatory tariffs will play out. You can bet that close to all of the target countries, which is basically everyone that the United States trades with, will strike back in some way. That will hurt US manufacturers, and it will be doubly painful for those industries that are having input goods go back and forth a bunch. Basically, it is a repeated prisoner's dilemma, where we have all gone from the nice cooperative outcome to the inefficient mutual defection outcome. And maybe, eventually, some of those US manufacturers will show some gains from this. But that will take a very long time, because you cannot simply build new industry overnight. It may take years. And some may decide that it is not worth the investment if the rules are going to be reversed after another election. Coincidentally, that takes us to the final point for today, and some fun with US domestic politics. You may have heard about 3 special elections that took place on Tuesday. The first, a Supreme Court race in Wisconsin, won by the Democrat-preferred candidate by 10 points. The other 2, congressional races in Florida's 1st and 6th districts, won by Republicans by 13 and 14-point margins. The trick, though, is that Trump won Wisconsin by 1 point in November. The Florida 1st district was the Republican by 32 points back then, and the Florida 6th district was the Republican by 33 points. Thus, you have an 11-point swing in Wisconsin, and a pair of 19-point swings in Florida. Now, we have to be careful because special elections are indeed special. But just the 11-point shift in the electorate would have given Harris all of the swing states in the 2024 presidential election. It would have also made Ohio a coin flip. Take the average of the 3 shifts, and you get 16.33%. That would also flip Florida, Alaska, Iowa, Texas, and Kansas. Now, I am not suggesting that Gavin Newsom and Josh Shapiro fly out to Topeka tomorrow. Rather, the point is that this is not sustainable for the Republicans in 4 years. It also reinforces a long-running trend, that Republicans struggle in the MAGA era when Donald Trump is not on the ballot. And speaking of him not being on the ballot, it is not even sustainable for them in 2 years. 23 Republicans won their 2024 House races with less than a 10% margin. So the same shifts during the 2026 midterms would bring a huge blue wave with it. We will have to wait a bit to see how the electorate views the broader tariffs, especially once the economic effects start to come in. They are not likely to be popular, though. Public opinion polls break about 60-40 against the pre-existing tariffs on Canada and Mexico. The new ones will be much larger, of course, and it will be the first real test of Trump's major policy shifts. For all of the media attention focused on diplomacy with Ukraine or Russia, and very stiff enforcement of immigration, The average American has not yet directly internalized any of the consequences. Unless you are someone involved in international security, me, or someone who works with immigrants on a daily basis, also me, it is possible that you would be completely unaware of everything going on if you never turned on the TV. Sure, there will be long-term consequences to those policies. An altered security environment potentially requiring greater investment in the military and correspondingly higher taxes. Also, a smaller labor pool and the dismantling of higher education in America. But again, unless you are involved in those industries, you might not notice what has been happening. A drained stock market, though? Yeah, anyone trying to save for retirement will feel that. And higher prices? Most definitely. Everyone will internalize them, especially poorer Americans who live paycheck to paycheck, and thus internalize more of what is ultimately a regressive tax. Inflation has been the most evil word in American politics for about 5 years now. Buckle up, because we are about to hear a lot more about it. By the way, I am technically a producer of goods, so if you are living outside of the United States, the prices of these excellent books about the war are probably going to be subject to a tariff real soon. Get them while you can by checking the video description. And if you enjoyed today's video, please like, share, and subscribe. And I will see you next time. Take care.